Okay, very simple. Don't get scared because TDS to TCS on the Papa students will have that notion. So our income tax, so many sections. No, sir. No, here only one section. Only one section. And in this diagram only majority I have covered of the provisions. What is it? We will see. Guys, who should deduct first? Who should deduct TDS? Government department, establishment, agency, local authority, board or society or public sector undertaking. Only if they are the payer, they have to deduct TDS. Sir, deduct TDS from whom? The supplier. Guys, listen. Supplier is someone else. Supplier has supplied goods or services to the recipient. This guy has to make payment. Na? While making payment, is deducting TDS. Is making deduction of TDS. When, sir? Always, no. Only if the value of supply is more than 2,50,000 in a year per annum. Per annum, the value of supply is more than 2,50,000. What is the rate of TDS, sir? 1 plus 1. That is 1% CGST, 1% SGST. Or if it is IGST, straight away 2%. Okay. Now, deductor, when he is making the payment, assume he is paying 3 lakh. From that, he has to deduct 2% TDS totally, 1%, 1%. And pay the balance to the supplier? Yes. Sir, whatever 2% TDS is deducted now for supplier, will he get a credit of it? Yes. Even in income tax, he used to get a credit now. From final tax liability, we will reduce. Same way. Here, he will get that amount credited to electronic cash rate. Now, assume I am the supplier. You deducted before paying to me 1%, 1% TDS. Now it is Govinda, no, it is as if I have paid it. So it will come and reflect in my electronic cash ledger. Now, for you to claim it or to prove it, I should issue a document. Correct? Now I have deducted 2% of your amount and I have given to the government. I should give some proof to you now that I will give it in the form of GSTR 7A certificate. Then whatever TDS the government has deducted, they will deposit it to the government within 10th of next month. So assume they have deducted on any day of January. They have to deposit on or before 10th of February. Okay. And they should also file GSTR 7 returns. That is TDS returns within 10th of next month. So within 10th of next month, very simple. For any TDS deducted in January, the deductor has to deposit within 10th of next month and file GSTR 7 with whom? Department. With department. Hope you understood. Now you may ask me, sir, what if the deductor is you or me, who is not a government or who is not covered in this list? Should we deduct TDS? No, no, no. So you should remember who are the payers. They are the payers, guys. Recipients. Please be careful, not the suppliers. Supplier is not making payment. Who is making payment? Recipient. If recipient is the following people, government officials, ನೋಡಿ shoot put account ನಿಂತಿದ್ದಾರೆ. So if they are the deductors, means if they are the recipients, before paying, they have to deduct TDS and remit it to the government within 10th of next month, guys. Okay, so. Section 51. This is a story. On the exam day and all, you will not have so much time to go through each and every subsection or section. So you would have already learned it really well. Okay. On the exam day, maybe this diagram will give you majority picture. Clear? Just revise, analyze, go. Section 51 of CGST Act states that department or establishment of the central government or state government or local authority, governmental agencies or an authority or a board or any other body set up by an act of parliament or a state legislature or established by any government with 50% or more participation by way of equity or control to carry out any function, or a society established by the central government or a state government or a local authority under the Societies Registration Act 1860, or a public sector undertaking. And now one more new person has been added. Amendment. Any registered person receiving supplies of metal scrap from other registered person. Means, guys, listen. Supplier is also registered. Recipient is also registered. What is he supplying? Metal scrap. Metal scrap. Don't worry about, sir, RCM applicable here. No, actually, no RCM is applicable. Why? Supplier is also registered. When supplier is registered, guys, we discussed RCM will stop. Who should take registration? If supplier's turnover process threshold limit, he should get registered. Yes. RCM stop, FCM starts. Clear? So here they are not talking about RCM and all. Actually, here scenario, when it is covered here, RCM or FCM? FCM. Because this guy is registered already. When will he get registered? If his turnover has crossed the threshold limit. Okay. So if this guy is supplying metal scrap for the government, when they are making the payment, they have to deduct the TDS, guys. That's all. At what rate, sir? To deduct We all call them, these people all put together, we call them as deductors. To deduct tax at the rate of 1%, that is CGST, from the payment made or credited to the supplier, the deductee, of taxable goods or services or both, where the total value of such supply under a contract exceeds 2,50,000, and 2,50,000 is only value of supply, not GST and all. Clear? For example, value of supply is 2.2 lakh plus GST. Assume 2.3 lakh is the value of supply plus GST is assume 30,000. So total value is 2.6 lakh. Should we deduct TDS? No, no TDS. Next, value of supply is 3 lakh plus GST 50,000. 50,000. So it is 3.5 lakh. Should we deduct TDS? Yes. On what amount? 3 lakh. TDS has to be deducted on 3 lakh. What? How much? 1%, 1%. CGST 1, yes, GST 1. Or if it is interstate supply, 2% IGST. Okay, sir. Next, government has exempted the application of TDS provision to the supply of goods or services or both from a public sector undertaking to another public sector undertaking, whether or not a distinct person. Means supplier and recipient both are PSU, no TDS. Next, when supply of goods and or services takes place between one person to another person specified under section 51, except person referred in G. So for G guy, there is no exception. So they're telling if they are giving service to him or he is giving to another person, they are exchanging. Supplier and recipient both are covered in this list only, sir. Except G. Except G. Supplier and recipient both are covered in this list only, sir. No TDS. No TDS. Hope you guys are getting it. For example, sir, this is government department and this is local authority, you assume. Should we deduct TDS? No, no TDS. Assume this is government department and this guy is supplier of scrap. Should we deduct TDS? Yes, TDS is applicable. Next, provided that no deduction shall be made if the location of supplier, observe this word, location of supplier and place of supply is in the same state or union territory, which is different from the state or union territory of registration of recipient. Guys, come on. Loss pass is in the same state. Intrastate supply? Yes. But location of recipient is in the other state. Should we deduct TDS? No. As it will lead to complication of giving credit and all, they told no TDS. Please be careful. Here we are not deciding intra or inter, but still we are checking it. Loss pass is in the same state, whereas location of recipient is in another state. Should we deduct TDS? No, because it would be difficult for giving credit to the recipient. So they told, because guys, simple, listen here. Let me give an example. Loss pass is in Karnataka, guys. Loss and pass is in Karnataka. So can I call it as intrastate supply? Yes. So what is applicable? CGST plus SGST. So we will deduct, assume TDS, 1% deducted. Okay. We have to give credit to the recipient now. Yes. Assume location of recipient is from Tamil Nadu. So in that case, how will we give the credit, sir? I cannot give SGST of Karnataka to Tamil Nadu, na? So giving credit will be difficult. Correct, na? So this is deducted where? Karnataka. Remitted to which government? Karnataka. Now can I tell, hey, Tamil Nadu government, give a credit of this? No. They will start fighting. Fighting. It will lead to conflict. That is why they told, okay, in this case, no TDS only. Go on. No TDS. The amount deducted as tax shall be paid to the government by the deductor within 10th of next month, guys. That is year only I have given. In GSTR 7 also he has to file. Next, a certificate of tax deduction at source shall be issued in form GSTR 7A by the deductor to the deductee. Then, the deductee, that is the supplier, shall claim credit in his electronic cash ledger of the tax deducted and reflected in the return of the deductor furnished in form GSTR 7 within 10th of next month. Means, guys, as soon as the deductor deposits the TDS and file GSTR 7, it will auto credited to electronic cash ledger of whom? The supplier. For example, I have given here, no? You can see electronic cash ledger, TDS, TCS also will be credited to cash ledger as if I have deposited the amount into cash ledger. So as soon as the deductor deposit the tax to the government and file GSTR 7, it will be credited to my cash ledger. If any deductor fails to pay to the government the amount deducted as tax he shall pay interest in accordance with the provisions of section 50 subsection 1 at 18% per annum in addition to the amount of tax deducted. In addition to the amount of tax deducted, guys. Means, sir, TDS deducted but not remitted to the government. Even if it is late, you have to deposit along with interest.